I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky, Vancouver-based realtor. You can find online at stevesaretsky.com. Welcome back to the show, Steve.
Yeah, thanks for having me on.
Steve, yesterday you spoke at the 2019 Vancouver Housing Conference. What were the takeaway points from there?
It was a pretty good, diverse panel. I think obviously unanimous decision or belief that housing has obviously slowed down significantly, and that would have some knock-on effects on the economy, and that it's likely quite a bit more downside to come. That the slowdown is more widespread. Obviously, Vancouver, we know, at 30-year low in home sales. It's a 33-year low in Calgary sales. Edmonton's obviously very, very slow, and then Toronto 10 years. So it seems to me like a lot of Canada has been slowing down. That was sort of interesting. They were talking about, we had insolvency trustees there, and sort of what they're seeing feet on the ground is that you're seeing basically, it seems to them that the insolvencies have bottomed. They're noticing their phones are ringing. So you're seeing more people in distress trying to service their debt, which is becoming obviously more difficult when your home prices stop rising and you can't refinance your home. And refinancing has become significantly more difficult with the B20 mortgage stress test. So for a lot of these people, it's kind of end of the line. Obviously, the real estate profession has been hurting quite a bit as well. It was interesting. One of the bailiffs there was talking about how they're beginning to repossess more realtor leases on their cars, which is tough to see, but I guess not overly surprising when your volumes get cut significantly as they have. And so interesting times for sure.
Well, we just had an Ipsos survey said that 48% of Canadians feel they're on the edge of bankruptcy.
Yeah, exactly. And I think, the thing with those is those surveys, I mean, they've been saying that for what feels like forever now. So I think people have just naturally tuned them out and just another survey, and Canadians are always just, living on the edge, and, everything's been fine. And, I think to me, again, with housing slowing down and the prices declining, that, it is kind of the end of the line for a lot of these people who have basically been using their home as an ATM machine for really the last 10, 15, 20 years.
Right, and so there becomes a point where the value of your house just doesn't allow you to take any more money out, right?
Yeah, exactly, and there's been a huge shift, and there was a good panel on private lending. We had a couple MICs, mortgage investment corporations, come in and discuss what they're seeing, the kind of clients they service, and that was, their primary business was a lot of these people are just looking to, expand and extend their lifestyle, and they've been using their home as a ATM machine, and then unfortunately with home prices declining, they're basically not able to pull out any more equity, and a lot of these loans now are starting to become called and are not being renewed, and that is creating financial distress, and you'll likely see more bankruptcies and foreclosures in the year ahead.
Now, Hilliard Macbeth told me in Canada, banks really don't want to take your home. Is it true it takes up to 2 years for real final action to take place?
Yeah, it's a very expensive process, and I think one of the guys there, again, who focuses in that space, is saying that the cost can be upwards of 12 to 15%. Just to basically go through the foreclosure process, the time that, you pay legal fees, you pay realtor fees to get the house sold. It's a very expensive process. So if they can avoid foreclosure, they'll definitely do that. And again, from a legal perspective, it is a very long and drawn out process where, it can take about a year to actually get done. And obviously the prices can change significantly in that 1 year, as we're seeing here in Vancouver, right? I mean, it's not unrealistic to say that prices in the past year are down 10 to 15%. So, the value can go pretty quickly. So yeah, as a lender's perspective, there's definitely more risk there.
Yes. And I remember another survey not long ago that said people felt they were $200 a month away from, falling off the edge. And I just look at gasoline prices in Vancouver. If you have a vehicle that needs premium gasoline, you're paying $2 a liter. How has that affected households and their real estate prospects?
Yeah, I mean, you're definitely going to see that sort of very late cycle dynamic pressures where they tend to stack up on the consumer, but not only with higher interest rates that we've seen from the Bank of Canada, rising debt service payments. So that really just all adds into it. And basically what's going to happen is it's just going to impact consumer spending moving forward, and that's obviously something the Bank of Canada has talked about. Even they're well aware of the situation, and so less consumer spending, which makes up over 65% of GDP, just is going to slow the economy down further. The Bank of Canada actually today just announced that they've revised their 2019 GDP forecast from expected growth of 1.7%. Revise that lower to 1.2%. So clearly, I think that they see the writing on the wall.
We'll have more with Steve Saretsky right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Steve Saretsky. Steve, at the Vancouver Housing Conference, was there any area where you heard any optimism?
Yeah, we actually, Ben who set it up, he tried to bring as much as a balanced panel as possible. The funny thing is, he actually asked, and I tried to put him in touch with a few people, but we actually tried to get some Vancouver real estate developers and some industry groups to come out and speak and, try to present the the bull case was to try to get a little bit more balance in the room, obviously. And, I mean, when the market's going down like this, there was a lot of guys that pulled out from that group. So it was actually really difficult to even try to get the bull side argument, because, when the market's sliding like this, these groups tend to keep information quite confidential and nobody really wants to talk about, what's happening in the housing market right now. So, but we did have, the first up was, an economic outlook. I think it was from PIMCO. So they're, a huge company and, basically provided a macro outlook, basically suggesting that their overall premise was it's not as bad as we're leading on to believe that, no doubt the economy will slow and the housing market definitely has more downside. They said, it's potential possibility that housing declines, say another 10% and then just goes sideways for another, 5 to 10 years. So, he provided a multitude of scenarios, which I think was, probably on the more, optimistic, positive side of things.
How are housing markets doing across Canada?
We're seeing significant weakness in the, particularly the western side of Canada. So if you look at, Vancouver, everybody knows about, you're seeing declines in home prices in Edmonton on a year-over-year basis, declines in Calgary on a year-over-year basis. You're still seeing prices actually rising. The rate of prices is slowing, but, price growth is still positive on a year-over-year basis, in Ottawa, in Montreal, in Toronto, which in my opinion is still kind of treading sideways. It's kind of just been flat sales at 10-year lows, but prices basically hovering around very marginal price growth. So it's kind of an interesting market over there.
How are the Canadian economy and the real estate market looking from a broader perspective?
I think that, as housing goes, the consumer goes. And so I think any sort of material slowdown in the Canadian housing market for a prolonged period of time, I think is going to have substantial impact on the economy. And again, that's what we talked about earlier. It's just the Bank of Canada revising their forecast, and, national home sales, I think in March were the lowest since 2009. So clearly across the country, this isn't just isolated to Vancouver. This is a broader slowdown, which I think is largely tied to a prolonged credit cycle, that is coming to an end with not only the mortgage changes, but higher interest rates. And, so.
We'll have more with Steve Saretsky when we return.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Steve Saretsky. Steve, when does the so-called spring real estate market end?
I guess you could say it's subjective, but typically we look at the busiest periods for home sales historically are generally March, April, May. That's usually when you're going to see the most sales volume. What we're seeing is March has been really, really slow, as we noted, a 33-year low. April appears to be the same thing, so you'll probably have similar type numbers coming out for the month of April. So it really just leaves you with May to sort of take advantage, I guess, as a seller of the spring market. So I think there's going to be a lot of disappointed sellers that were banking on the spring market to sort of get their house sold, and unfortunately we've had pretty much record low sales for 2 of the 3 months. So and I really don't suspect that May will be much different.
Are sellers lowering their asking prices, or they still have their heels dug into the turf?
We're starting to see it. I definitely feel like prices are accelerating lower. And I think that is because sellers are becoming more aware that, the market's just not quite what it was. It'll be interesting to sort of see how they react to the market and what their, future plans are once they realize, the house didn't get sold in that spring market. So, after May, you start to enter June, July, which are obviously the dog days of summer. Typically a slower time for real estate. So, what's your price plan moving forward? My belief is that it's going to have to be more price reductions. What are you going to do? Try to wait out till you get to, spring 2020. Certainly, that's a big risk that sellers, I think, will be a little bit more hesitant to take this time. That's kind of what I'm seeing right now.
Is home equity loan, line of credits, or HELOCs debt continuing to grow?
Still some growth in home equity lines of credit. So certainly people, I guess, in my opinion, and based on some of the conversations we had at the conference, it is kind of, an extend and a pretend situation where, you just draw out, equity as much as you can and try to use that to service debt payments. I suspect that those home equity draws will begin to slow significantly. OSFI, who's the financial regulator, has also been looking at that quite closely and clamping down on some of the banks, trying to encourage them to be a little bit more conservative, lending towards home equity. So I think that's going to be an interesting component to watch moving forward.
Is increased HELOC debt a good or bad sign for the real estate market?
I mean, you don't want to see it growing too quickly. I mean, that's generally not healthy either. But if it's growing too slow, then it can really start to weigh on consumer spending and on the economic growth. But right now, to me, from last I checked, I have to look at the numbers. I think it's still growing at a fairly decent pace. So we'll have to sort of watch and see. It's kind of too early to say anything about that.
What's the difference between a HELOC and a reverse mortgage?
My understanding is like the reverse mortgages. I think that just they're basically drawing down your principal. I believe it's also a higher interest payment as well than a home equity line. A home equity line is essentially just an interest repayment that is tapping into your home equity. So a lot of the times they're actually just set up there, and you can draw them as you see fit. So that's Are
alternative lenders taking a bigger share of the mortgage market?
Yeah, that's the big debate. That was one of the main topics of discussion at the housing conference there. Basically, if you look at Greater Toronto Area, a recent report from CIBC has alternative lending, which is basically a lot of the private lending space, is making up 15% of the total market share. And I would suspect that it's probably something very similar in Vancouver. The thing is, nobody has really good, clear, hard data on a lot of this. So it's a very, very murky situation. I think it actually creates, in my opinion, more financial instability because a lot of these loans are 1-year terms, and they're based solely, a lot of them, on just equity in the home. So not necessarily what your credit score may be or your capability or ability to pay it, but it's more so how much equity do you have in the home. So it does create a lot more, in my opinion, more instability.
Could alternative lenders be at risk if a real estate market collapses?
For sure. I think it's one of the more risky spaces in terms of, there's definitely a lot of good private lenders and a lot of mortgage investment corporations that are out there, providing liquidity and doing it properly, being conservative about their lending, really doing a lot of checks, primarily lending on first mortgages. So there's a lot of good companies out there. I don't think you can paint all of them into one space, but there's certainly a lot of really bad loans out there that are derived from private lending. People that are issuing, second and third mortgages of, upwards of $1 million on luxury homes where there's zero liquidity at this point. And the equity is evaporating quite quickly, where there's going to be substantial amount of losses, for some of these lenders.
Do surveys showing Canadians are a paycheck away from bankruptcy always seem to come out on the same week that the Bank of Canada makes their rate decision?
I don't have too much to say there. I don't know if I don't want to get too much into conspiracy, but I think the Bank of Canada is aware, and I think they're probably still downplaying the severity of the over-indebtedness of Canadian households. As we see, people often compare Canada to the U.S., but the households are in much different shapes. Household debt service ratio in Canada hit an all-time high recently, are just very close to it, and in the U.S. you have household debt payments at basically record lows. So the two households by country couldn't be in more different situations today.
Steve, thank you so much for chatting with us.
Thanks a lot, Jeff. Always a pleasure.
My guest has been Steve Saretsky. He's a Vancouver-based realtor that you can find online at stevesaretsky.com. If you have any questions for Steve or any of our other guests, you can send them to info@housestreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.